Good afternoon everybody, welcome to Auto Mechanica. I'm the Motorclaimguru. Hopefully if my marketing's done well, you'll hopefully know who I am. If you don't, stick your hand up. Does anybody know who I am or what to do? If you want to find out more about me, you can find on screen my website, or for ease of use you can scan the QR code. On my website you'll find thousands of pages of information related to anything to do with insurance claims. So who is Motorclaimguru? My name is Tim Kelly. I'm known as a man who fights insurance companies. And to be honest, I frankly scare the bejesus out of insurance companies, and I actually take great enjoyment in doing it. I love what I do. My background is I've worked in the insurance industry for the best part of 30 years. Originally I came from the trade, I used to be a mechanic. I went from working on cars to working for insurance companies. In that time of working for insurance companies, I worked for two of the largest insurance companies out there. And I worked hard to develop my skill set and my education, my qualifications. And one of the best things I actually did was I did the Institute of Automotive Engineering Assessing course. And on that course, I learned about contract law, consumer law, insurance law. And it helped me develop the skills that I have now. I specialise in helping consumers when they're fighting insurance companies. So if you've got an insurance company that's not doing what they should be doing, I resolve those situations. But I also use that skill set as well to help body shops as well. And my aim is to educate and empower the repair industry by passing on the knowledge that I have to you repairers, so we can readdress this balance of knowledge and power, where I can put the power in your hands and take it away from insurance companies. So what is the game? Well, in the next 20 minutes I'm going to explain all aspects of the game, but also the rules of the game that you've been playing with insurance companies, that you've probably been playing it for the last 20 odd years and don't even know you're playing it. And the game that we have is one between insurance companies and body shops. And every business, its primary goal should be around making profit. So whether you're an insurance company or a body shop, that's your key goal. But what we have with insurance companies is that they like to charge a premium and take your money from you, but they don't like to spend the money. So they want to hold on to that money as much as they can. Now from a body shop's point of view, if you're dealing with accident claims, most of these claims should be through an insurance company. You want to make sure that you're charging for every single thing that you can do to make profit from that claim which the insurance company is paying for. So clearly there's going to be some tug of war going on there between the insurance company and yourself as a body shop. So what are the rules of the game? Well, insurance companies are bound by an aspect of law called the Financial Services Market Act. This plays one part of it. But as a society, we are governed by our government, and we have laws in place that make society run better. With these laws, we have members of Parliament who we put in place to represent our view. And there are times in society where we might need to be protected. And if you raise that to a member of Parliament, they should be raising your view in Parliament and saying, do we need to have some type of protection here to protect consumers or businesses? So we've got this aspect of general law. We've got the Financial Services and Markets Act, which is what insurance companies are regulated at, right? But we've also got other things involved in what tools you need to be aware of and have an understanding of. So we've got consumer law. So you purchased an insurance contract. So within that contract that you have, it'll have terms and conditions within that contract. So you need to understand what the contract is and what you're entering into. Does it fit your demands and needs, as an example? We need to understand what contract law is, because once you've bought this contract of insurance, is the insurance company going to do what they've agreed to within the contract? We've also got Road Traffic Act. You're dealing with vehicles that's been repaired, they've been involved in an accident. The laws and legislation that involve vehicles in the UK about the use of vehicles on the road is the Road Traffic Act. The Road Traffic Act came about in 1930, and what it did was it made it mandatory that we have third-party and compulsory insurance to make sure that people who are injured as a result of somebody else's negligence are compensated. That's the reason why we have insurance. Because previous to 1930, if somebody got injured as a result of being involved in an accident, it might be that they wouldn't have been compensated. Now, if you're the injured party, this comes under another aspect of law, which is called the law of tort. So, if you're the injured person, you've had a tort visa made against you, you've been subject to a tort visa. And it means that you can create a civil claim to seek compensation from the liable party. So we've got insurance companies who are paying out compensation to consumers. And it's clear that these are large financial institutions. They've got a lot of power. And it might be that they act in their own interest and not in your interest. It could then be that we need to make sure that somebody's keeping a watchful eye over them and that they should be doing the things that we expect of them. And that's the reason why we have a regulator. So under the Financial Services and Markets Act, we've got this piece of legislation, which is a statute in law. It's compulsory. And under the Financial Services and Markets Act, we then have a need to have a regulator, which is the Financial Conduct Authority. And we need to look at what their role is. We also need to look at the FCA regulations. Now, the FCA regulations stipulate what all financial institutions have to do by law. Now, the interesting thing is that in all my time when I worked for an insurance company, and even though I've gone through lots of training to be qualified as an engineer, I act as an expert witness now, I spend a lot of time in court, that at no point through my education or my training did anybody at any point tell me about the FCA regulations. And yet these are the very tools that I use on a daily basis to hold insurance companies accountable. So we're playing the game now. Now, previous to this, you might not have even been aware you're playing a game. Now, if you don't know you're playing a game, how can you win? Because only when you know when you're playing a game, and at some point, then it's like, yeah, I need to compete in this game. Now, if you don't know what the rules of the game are, again, you'll never win. So you need to understand what the rules are. Because only when you know the rules of the game will you win. Again, reiterating. So I worked for insurance companies for the best part of 30 years. You would have thought at some point somebody might have mentioned it to me. So for the best part of 30 odd years, I could have potentially been breaking the law and didn't know. When you know the rules and you play by them, you'll make profit. Now, if you think from my background and my experience, if I've never been trained about the regulations, I'll guarantee that if you're speaking to people from insurance companies, they won't have been trained either. So the instant you have this knowledge, you'll have more power in the conversations you're having with these insurance companies because you'll know more than the people you're speaking to. So what's insurance? And what should it do? The basic premise of insurance is a promise. And it's a promise that they're going to indemnify the loss that's occurred. So they're saying that if you've got something that's insured and you've lost it, whatever the financial amount is tied to that thing, they'll compensate you for it. So if it's talking about vehicles and the vehicle's damaged, if the vehicle's stolen, they should pay out the market value. If a vehicle's damaged and it needs repairing, then you're entitled to the cost of repair. Now, what insurance companies have people believe is that, they'll dictate how they're going to compensate you. They'll tell that they'll authorise the repairs or they'll do this or do that. And it's like, no, the whole premise of insurance is that they're compensating you financially. It's about indemnifying that financial loss. And when we look at insurance, you actually need to understand more than what indemnity is. You also need to understand how an insurance policy underwrites a policy. Now, the way they do that is they need to look at the risk attached to whatever it is that's being insured. But what they also do within their underwriting, the best way I can explain it to you is to tell you a story. So when we look at insurance and the reason why we have it, I've explained to you about the Road Traffic Act. It made it mandatory in 1930 that we had compulsory third-party insurance. Well, if you think from an insurance company's standpoint, prior to 1930, if there was no motor insurance, how can they create a policy that will do what they need it to do? So prior to 1930, the only real things that would have moved around that would need to have been insured were boats. So in legalese, anything that moves that's insured is called a chattel. So the origins of motor insurance date back to 1906. It's the 1906 Marine Act. And just as another quick fact, just to show you how slow insurance is at moving, the most recent changes in insurance law was 2015. There's a 110-year period from where the origins of motor insurance started to where they are now. So it's a very slow-moving industry. if you think about marine law, imagine being a mariner in the 1800s, and you need to earn money by transporting goods, from taking things from one place to another. You might wonder how I can make profit but also protect myself against risk. So imagine we're this mariner, and we're down at the docks at the Thames, and we're walking around, and you've just seen a friend you've not seen for ages, and he's just returned from France. And within the conversation he says, I've just found out there's a food shortage going on in France. If you can find some farmers and you can tell them that they can sell their products in France for double what they can in England, if you charge money to take those goods across, you can make more profit. He thinks, you know what, yeah, I like that. So he walks around the docks and he sees a farmer. And the farmer's there with his horse and cart, it's full of potatoes. And he goes across to the farmer and he says, are you aware there's a food shortage in France at the moment? And you could sell your potatoes for twice as much in France as you can in England. And the farmer says, no, I wasn't aware of that, but I think I'll agree to that. Well, for a small sum of money, I'll transport your goods over there. You'll make more profit, and I make my fee. And the farmer says, yeah, I'll agree with that. In fact, he thinks, you know what, I'm onto something here. And he carries on walking around, around the marine. He sees another farmer who's got a livestock, a load of cattle. And he says, farmer, I've been talking to another farmer over there. He says, do you realise you can sell your cattle for more in France than you can in England, because at the moment there's a food shortage? And he went, no. He said, well, for a small sum of money, I'll transport your cattle over there, and you can make double what you're making over here. He said, yeah, I'll have some of that. And this goes on. He sees another farmer who's got a load of grain. Meanwhile, while he's walking round, he sees a smartly dressed man at the back. And this smartly dressed man comes across to him and says, I can't help but notice over here that you're going to France in the next few days. I've got something really special that needs to go over there, and I need to personally hand it across to somebody in France for me. But the thing is, it's very precious and very expensive. The item that I've got is a diamond ring. It's worth £1 million. So I need to make sure that you protect that ring against all type of risks. And the mariner says, yeah, no problem. I've got a cabin on the boat, I've got a safe inside the cabin, there's only me who's got a key to it. I'll personally make sure that nothing happens to it, but I'll also make sure I personally hand it to the person on the other side in France. And for a sum of money, I'll do that for you. The viewer says, yeah, that's fantastic, but there's one guarantee on this. I need to actually make sure that you insure the diamond ring as well. So the mariner's like, yeah, great, I agree to that. Now the thing is, on a boat, you think about being at the Thames, at the docks, and you've got risk attached to that. There's going to be rats going around in water. And what might the rats do? Well, the rats might eat the potatoes. They might eat the grain. So if you've entrusted your product with somebody else, that mariner is acting as a bailee over the property. And this is another aspect of law in the law of tort. So as a bailee, I've got a common law duty of care over your product, your assets that are in my control. So it might be that I need to insure them. So how do I protect myself against risk in the 17 or the 1800s? Well, I need to find people with money. So who would have money in the 17, 1800s? It'd be the bankers. So where do you think you'd find the bankers in London in the 17 or 1800s? Well, as most people do, you'd probably go down to the pub. And that's where you'd find them. They're over there getting pissed. So the mariner would go, right, I need to find where the bankers are. I'll go to my local pub. I'll go to the bartender. And I'll say to the bartender, I've got some new business and I'm looking for the bankers. So what the bartender used to do, he'd ring his bell and he'd go, new business, new business, new business, clanking away on the bell. Now this is still something that happens at Lloyd's Syndicate in London to this day. It's something they still do, and it's where it came from. So the bankers, on hearing the bell, having it drawn their attention, would say, mariner, tell us your business. And he'd explain that he's got a boat and he's got some goods on it and he's got cattle on it and potatoes and there's a risk there because the rats could eat it. And he's also got this diamond ring. It's worth £1 million. So what happened is, you might find there's a table there of 10 people, all bankers. You'd say bankers. And one of them says, yeah, tell you what, I'll have some of that. I'll insure the first £500 of any risk. Now that first person has got the highest potential amount of claims that could be made, because £500 is easy, but he's limited what he's going to pay from an underwriting point of view. So he's got the lowest amount of money to pay out. And it might be the next person might say, well, I'll insure from the next £500 to £5,000. The person after that might be £5,000 to £20,000. And this might go on to 100 to 200, 200 to 500. And you might find the last person, who's the 10th person, says, well, what I'll do is I'll insure the last £500,000 to £1 million. So he's got the highest potential financial risk if somebody claims, he's going to pay a full £500,000. But he also knows the other 9 people have got to make up that money up to the first £500,000. So he's got the highest potential payout but the lowest amount of risk. And what they do between the 10 people is they accept that risk and they split the premium equally. And this is what's called proportionality. They all take a proportion of the risk and a portion of the premium. Now imagine something happens to the boat and what's on the boat. Do you think they're going to go out and buy some new cows? They're going to buy a load more potatoes or buy a diamond ring? Oh no, of course they don't. So what they actually do is the only way you can satisfy a contract of insurance on the basis of provision of indemnity is by financial compensation. It's always a pecuniary loss. It's always about the money, and nothing's changed to this day. When we look at vehicle claims and motor insurance claims, you might have an insurance company say we're going to authorise repairs on it. That's not what they're there for. The sole purpose of an insurance company is to provide indemnity for the financial loss that's occurred. So all we need to do, as a body repair side of it, is quantify that loss. And that's the role of an engineer, which is what I used to do. So when we know we've got an insurance product, we know that we've got an insurance company that's going to dictate what they want to try and pay us, and it's clear that potentially they might not want to be acting in our best interest, and we need to keep some type of oversight of them. So we need to have regulations in place over them. The FCA regulations cover all types of financial industries. It's not just insurance, it's also banks, mortgages, pensions. So this thing I'm telling you now is really important because it involves every aspect of your life. And within the FCA regulations, so it starts off with the Financial Services and Markets Act. That's the law that applies. From the Financial Services and Markets Act, we have the regulator, which is the FCA. The FCA then has the regulations that they apply. So these can be found in the FCA handbooks. Within these FCA handbooks, it's got what we have an umbrella of regulations, and these are called principles of business. So in these principles of business, it's split into 12 different sections. So I'm not going to go through all of them. I'm just going to tell you about the 2 key areas that I refer to on a regular basis. So there's Principle 6, and that's called the customer's best interest rule. Now, anytime you see anything in the FCA regulations where it says you must do this, that's the FCA saying, don't mess around, you must do this. If you don't do it, we'll take action against you. They absolutely have to do it. Another FCA regulation that I refer to in the Principles of Business is called the FCA Consumer Duties. And what it does is it makes an overriding duty for every financial industry to make sure that they don't cause financial detriment as a result of their actions when they're dealing with the consumers. Again, it's an absolute requirement of them. So you might wonder what would happen if a company breaches the FCA regulations. You can be fined or imprisoned. It's really, really serious stuff. You can be fined up to 10% of your global turnover, or you can be imprisoned for 6 years, and that can be the CEO or it can be the person doing the breach. It's really serious stuff. So now we know we've got this umbrella of regulations advising what's required of financial institutions. We've also got specific regulations that relate to insurance. And the regulations we've got are called ICOPS. It's called the Insurance Conduct of Business Standards. Now what we have within ICOPS is it specifies what the requirements are of an insurance company from selling the product, selling the actual insurance policy itself, to the actual claim and the settlement you obtain from it. Now within ICOPS, again, I know these regulations inside out, upside down, back to front. I've learnt them over a long period of time, so I'm not going to go through all of them. I'm just going to bring to your attention the most significant ones that have relevance to you. So the one that I refer to on a daily basis again is another one called ICOPS 2.5-1. It's called the Customer's Best Interest Rule. So it's simply the same regulation that was reiterated in Principle 6. So from an FCA point of view, if they mention something one, you've got to do it. When they put an absolute specific regulation going, listen, we mentioned it once, we're bringing it to your attention, you absolutely must put the customer first. The fact you're a business, you want to make profit, doesn't come into it. The customer needs to have an expectation that when they're they've bought a policy that the expectation they have in buying that product, they receive it at the end of it. Now within these regulations, what we also have is another one where when I was speaking to you about the law of tort, what a tort visa is, and you're claiming your money back from a third party, you have two different sets of entitlement in a claim when you're claiming from a third party. You've got one set of entitlements in law, which you've got under contract law with the contract of insurance you've been entered into. But you've also got a separate set of entitlements under the law of tort, and that's a civil wrong. So what we have under the law of tort is there a very specific piece of case law where a precedent was set in the courts in 2013, and it's called Coles versus Heatherton. And the interesting thing about this piece of case law was a judge had to decide on what was a consumer entitled to in the event that they've lost something as a result of an accident. And what the judge said was basically that a consumer is entitled to the full retail cost of repair to repair their vehicle. It didn't matter an insurance company can get it repaired for less, they were entitled to that full retail cost. So you might wonder what the relevance of that is to yourself as a body shop. What it means to you is that in the event that where you're repairing a vehicle that's subject to an accident that's somebody else's fault, you don't need to negotiate. You don't need to be negotiating on your labour, your paint materials, your parts, giving discounts away. You should be charging the full retail cost of repair. Now you might find in your conversations and your negotiations with the engineer, they might try and reduce your estimate. You've got absolutely no need to, but you need to be bringing this to the attention of the engineer to say, my understanding is you're regulated by the Financial Conduct Authority. You can't be acting in conflict to the customer's best interest. Well, you need to be acting in the customer's interest. You can't be acting in conflict to their lawful entitlement, which comes with this aspect called ICOPS 8.3.3, conflicts of interest. So in trying to negotiate away this loss by me agreeing figures with you, you're actually acting unlawfully. So the key thing I get raised most by body shops is around insurance company steerage. Insurance companies trying to steer their repairs away from repairers into their repair network. And I guess, again, this comes into an area where potentially they might be acting unlawfully. So we've got something called the 2002 Enterprise Act, Section 8 for unfair commercial trading practices, which insurance companies just seem to want to ignore. But when we look at specific tactics that insurance companies might carry out, they might do something where they apply an increased excess to their insured should they wish to choose you as a repairer. Now when I said to you about understanding what contract law is and why there's an importance in doing that and why I need to understand the terms and conditions of that contract, just because something's in a contract doesn't mean it's lawful. So we as consumers need to be protected from institutions because they might try and put things in that contract to catch us out. Now there is legislation in place to protect us against that, and it's called the Unfair Terms and Conditions in Consumer Contract Regulations 1999. It now falls as part of the 2015 Consumer Rights Act. It's also paralleled in the FCA regulations under UNCLG. What it says in that is where a contract's pre-drafted, where the terms and conditions of that contract favour one party's obligations over and above the other, where it causes financial detriment to a consumer, those terms and conditions should be retracted from the contract whilst the rest of the contract remains in place. So my belief is that with insurance companies applying these increased excesses, it's unlawful. And what I would suggest all of you do is when you have a customer who brings this to your attention, you need to educate them on how to complain. And I'm that passionate about it, I'll even help the customer for free. I'll take the complaint on for them and complain with their insurance company and to the Ombudsman. The whole reason why I'm providing this session today is because I want to educate and empower you. Because the primary thing that you need to be doing is you need to retain that customer. If you lose that customer to an insurance company, you're not repairing the car. And if you're not repairing the car, you're not making profit. And what I want to help you guys do is make profit from repairing vehicles, but also make sure that when you're dealing with insurance companies, you know more than they do. So I want to go through the key takeaways today. So you all need to understand you're playing a game. Like I said, you might not have been aware of it. Only when you understand that you're playing a game can you win. You need to learn the rules. You need to understand contract law, consumer law, the FCA regulations, what insurance is, what it should do, what you should expect from it. But you also need to understand when the rules are being broken. Because only when the rules are being broken can you then bring it to the attention of the insurance company and go, you can't do that. Because insurance companies will just try and flounder you. They expect you not to know what you're talking about. When you know the rules and you know when they're being broken, you can play smart, and the smarter you are, the more profit you will make. I'll absolutely guarantee it. And you'll retain the customer. If you want to know more about the information I've gone through in the session today, as I said, there's a QR code to start it, I put on there, but if you just Google Motorclaimguru, you'll find there's thousands of pieces of information on my website. Use the contact form to contact me. If you fancy a training session to learn more about what I've gone through, I'll gladly tell you how to be better educated, but I also provide training on other aspects of business consultancy as well to body shops. I hope you all enjoyed the session. Feel free to contact me, and if you've got any questions, put your hand up, I'll answer them. Thank you, everybody. Any questions? Go on.